Take 7,500 at 70.
This is where it all began. Last week, the bottom fell out of the stock markets in New York. Billions and billions in equity just evaporated. For people with investments, it was an expensive and terrifying spectacle. Only those with nothing to lose could remain tranquil in the face of such bloodletting on Wall Street.
That's all we got to say about the financial crisis. Pockets is empty.
Never had money, ain't worried about it. That's what it is.
Trust in brokers has plummeted.
Can we ask you, who can help in the financial crisis?
God.
Economists are perplexed, even former Fed Chairman Alan Greenspan.
If that happens, then this is a once-in-a-half-century, probably once-in-a-century type of event.
Is it the worst you've ever seen in your career?
Oh, by far. There's no question that this is in the process of outstripping anything I've seen, and it still is not resolved, and it still has a way to go.
Congressmen, CEOs, investors, borrowers, lenders, we all got too greedy. We went to that frat party, we partied our butts off, and now we're paying the price. And this is a big hangover.
And the hangover is international. In London, thousands of bankers have lost their jobs. But many fear there's more pain to come.
It's not the end of this crisis by any means, but it does provide some relief and some time to gather thoughts and to move into what's going to be a very, very difficult era.
US President George W. Bush wants to push through a $700 billion bailout plan. Aid for the banks paid for by the taxpayer.
The risk of not acting would be far higher. Further stress on our financial markets would cause massive job losses, devastate retirement accounts, and further erode housing values.
People who are saying that this is a bailout of the large companies, I think are not getting the point that it's really not a bailout of the large companies. It's a bailout of the US economy, which affects everybody.
That includes traders in Frankfurt. They might cheer up if the rescue package succeeds in calming the storm. But the reputation of US banks has been sorely tarnished.
The rescue plan of the US government may be necessary, but it is nonetheless a declaration of bankruptcy on the part of the US banks. They distributed their risks in such a way that they were no longer able to solve their problems themselves.
German banks have been hit as well. Authorities here have already banned risky investment gambits such as naked short selling until the end of the year. The gambling debts of a few mean pain for everybody. Chancellor Angela Merkel has criticized the US government for failing to prevent the crisis.
Many of these financial products were sold in America, to the benefit of the Americans. The losses are now pretty much spread all over the world.
So what next? Investors are nervous and confused. Strategists make sibylline statements, suggesting the bottom may not yet have been reached.
We need to retest the low that was established to make sure that it's a good one. It's almost like, stamping on a floor that was recently put in. You stamp on it to make sure you're not going to fall through. Of course, you might end up falling through, and then you realize it wasn't a good floor.
It takes nerves of steel to invest in stocks these days. But ironic observers and bards are taking a more philosophical approach.
Stock exchange is going down, going down, going down. The stock exchange is going down, and everything's the same in my town. The stock exchange is